Hello everyone and welcome to Living Finance. Please remember to subscribe to our channel and turn on the notification button. Living Finance is a platform that is dedicated to developments in the economy, finance, jobs, technology, cryptos, blockchain, artificial intelligence, healthcare, energy, electric vehicles, cars, and the automotive industry. The platform tries to analyze how development in these sectors impacts our everyday life and our personal finances. Today, we're going to be reviewing the earnings reports for electronic vehicle manufacturers. As you know already, we are in the month of March of 2022, and some of the earnings report or the earnings report for some of the companies are out. And today we'll be reviewing Workhorse Motors, Fisker, Lucid Motors, and Nikola. We'll be taking a look at the spotlight, the talking points. Did they meet the estimate, the market estimate? Did they beat the market estimate? Did they underperform? Did they overperform? And you know, electronic vehicle industry is, of course, a new industry, so to speak, right? So there are challenges. What are those challenges? And what's your favorite electric vehicle manufacturer? Some like Tesla, but I think I love Lucid. I love the design of Lucid. But we're not going to be talking about the specific designs today. We're going to be talking about money, the financial reports of these corporations, how well they fared, if they beat the market estimate, or if they are meeting the expectations of shareholders. So this is earnings season, so let's get started. Workhorse, for those of you who do not know Workhorse is an electric vehicle manufacturing company. Workhorse bid for the USPS contract, United Postal Service contract, to supply the United Postal Service all electric vehicles, all electric delivery vans. But unfortunately, the contract was awarded to Oshkosh, and Workhorse went to court, filed a suit, and later voluntarily withdrew the suit. So, how has Workhorse performed in the fourth quarter of 2021? Now, let's take a look at Workhorse fourth quarter report 2021. The market estimated that Workhorse was going to lose 14 cents per share, but unfortunately, Workhorse lost minus $1.05 per share. That translates to a loss of $156.1 million for the fourth quarter of 2021. You would recall that the market estimated minus 14 cents per share loss, but Workhorse reported a whopping minus $1.05 loss per share. On the positive side, Workhorse announced a partnership with a Canadian electric car manufacturer. The company is called Green Power Motors. Workhorse stated that they will build new delivery vans in America and Canada using Green Power Motors chassis. And there's an exclusive agreement between Workhorse and Green Power Motors that Workhorse will have the exclusive right to sell these cars manufactured with Green Power Motors chassis in the United States and Canada under the Workhorse brand. I think Workhorse is trying to, rethink its market strategy by introducing new kind of delivery vans into the American market. I think it's also strategic if it's successful that they have the exclusive right to market these vehicles in the US and also in Canada and under their own brand, the Workhorse brand. Workhorse estimates to generate about $25 million from sales of the vans and the remaining C1000 series, which is the earlier version of their delivery van. On the positive side, Workhorse reported a cash at hand of $201 million at the year end December 31st of 2021. So let me know what you think. Do you think Workhorse will be able to surmount these troubles, the financial losses? Do you think an estimate of $25 million from the 1000 series and the new and also the production of the new series using the Green Power Motor chassis, if it's going to help uplift their market share? I don't know, but let's see what the market is the best determining factor. If you're conversant with Workhorse, you would know that Workhorse owns shares in Lordstown Motors, and Lordstown Motors surprisingly came up with good results this year in this fourth quarter. Unfortunately, Workhorse divested or sold their shares in Lordstown Motors. So now it's time for us to take a look at Lordstown Motors and also take a look at their reports, their earnings, if they did well and how they did. Workhorse owns shares in Lordstown Motors and sold it. They sold the shares. Surprisingly, Lordstown Motors reported their earnings on the 28th of February 2022, and their report beat market estimate by a whopping 42.47%. The company recorded an earning of negative per share, earnings per share of 42 cents minus 42 cents per share. Why the market estimated that Lordstown was going to lose 73 cents per share. That's a surprise, right? Understand that Lordstown Motors is an electric vehicle company, and all the companies we are discussing here today are all electric vehicle companies. Okay, we are looking at the possibility or the potential of electric vehicle company. Remember, it's not a financial advice. You're not obligated to make any financial decision based on this broadcast or on the reports you hear here. And we are only trying to report this information for information purposes only, not for investment and not as an investment advice. Now let's take a look at Fiscal Motors. Fiscal Motors, they make very slick, beautiful looking cars. I love the designs of Fiscal Motors. You can go online, check them out and see how the designs are, right? Now let's take a look at the report. Fiscal Motors reported their results on the 16th of February of 2021. The market estimate was a negative 46 cents per share, but Fisker reported minus 47 loss, a loss of 47 cents per share. Okay, negative 47 cents per share, missing the market estimate by 0.01 cents. We will keep you informed with the development if they have, what happens with their projected revenue for 2022, if they have more demands or if they meet the demands, and how the competition is only going to get hotter in the electronic vehicle industry, right? Because the traditional gasoline companies are also entering into this sector. Of course, you know about Volkswagen, you know about Mercedes-Benz, and you know about Ford, and these companies are spending a lot of money in research and development. The king of this industry is Tesla. The result of Tesla is not out, but we're going to review that when it comes out. So now let's take a look at Lucid Motors. Some believe that Lucid and NIO are Tesla, they are going to be Tesla killer. I don't know. Let's leave that to the market to decide. But today we're going to be looking at the finances of Lucid Motors. The financial report of Lucid Motors. Lucid Motors reported their financial report for the last quarter on February the 28th of 2022. Lucid Motors earnings per share fell below the market estimate. They lost, 35 cents. But Lucid Motors reported an actual loss of 64 cents. Let me take that again. The market estimated that Lucid Motors was going to lose 35 cents per share. But Lucid Motors actually reported a loss of 64 cents per share. That's a lot of money. That's literally 80% than the market estimate. Also, Lucid Motors says that the company lost $4.8 billion in 2021. However, on the brighter side, the company stated that the reservation for its Lucid Air sedan is in the excess of 25,000 units, with a potential revenue from sales of $2.4 billion. These are estimated figures. Let's wait and see what if they will meet actual delivery, right? They have this estimation for 2022 that they've lost $4.8 billion in 2021. They have an estimated potential revenue of $2.4 billion in 2022. Now, these are estimates. We'll have to wait for the result to see the actual delivery. If they deliver on those cars, if they had more requests, and if they met, with the outstanding orders they have. The other company of interest, this company is a company that I like and I've been researching on, is Nikola. They are a heavy-duty electric vehicle manufacturing company in America. However, the company has been littered with a lot of negative news in the last year. Surprisingly, in the fourth quarter of this year, Nikola beat market estimates. Nikola has been a company that I've been following for a while, and a company that has been littered with good and negative publicities, depending on how you say it. But I'm interested in Nikola, and I've spent some time researching Nikola because they are that heavy-duty electric vehicle manufacturing company in America. And if they succeed, that is going to transform the haulage industry in the US. It means the haulage industry is going to be transformed from heavy-duty gasoline cars to clean energy powered electric vehicle, haulage delivery company. Well, the market estimated that Nikola was going to lose 32 cents per share, a loss of earnings per share of 32 cents. That was the estimate. Nikola actually surprised the market and reported a fourth quarter earnings per share of 23 cents loss, beating market estimates. Nikola also said that in 2022, they expect to gain or have a revenue of 90 to 150 million dollars. And as at the year end of 2021, Nikola reported that they have 522 million dollars at hand. Nikola also estimates that the company will spend between 295 million to 305 million in the year 2022. I would want to keep you updated with this. I would want to keep everyone updated. Let's see how Nikola transforms itself. If Nikola succeeds in building long mileage delivery vans using electric vehicle, that is going to change the haulage industry in the US, right? It means the companies that do deliveries, right, can rely on Nikola clean powered energy vehicles for long haulage. That will reduce emission, that will increase efficiency, right, and environmental sustainability, right? Of course, Tesla has not announced its results yet. We'll be looking at Tesla's results when that becomes available in another video. And we are also going to compare Tesla with NIO and Tesla with Li Auto. These companies are companies that are making inroad beyond the traditional market where they operate. Tesla in the US, Tesla has made inroad into China and Europe. So also has NIO Motors made inroad in other jurisdictions. So we're going to compare those companies and see their results vis-a-vis, their market share. Also discuss NIO's interest to list in the Hong Kong Stock Exchange and what it portends for the company as well. Thank you for listening. Remember, it's not a market advice. This is not an investment advice. We're only here to keep you posted with happenings in this sector of the economy. Hi everyone, thank you for taking out the time to listen to our broadcast today. And do not forget that we bring you good topics every day. Subscribe to our YouTube channel, hit the notification button so that you can be notified when we upload new videos and new content. We'll try to make an in-depth research on every topic to break it down to you from wholesale issues into retail pieces information so you can dissect it on your way and understand it without really having to break your head. Please subscribe to Living Finance channel. We love you all and hope to hear from, hope to see the interactions on the comment button below. Thank you. Disclaimer. The opinion expressed in this broadcast and all of the contents belonging to this channel and platform are not and should not be interpreted or construed as investment or financial advice. You should not rely on them to make any financial decision. You must consult a financial advisor before making any financial decision.